Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of it should be relied upon as any form of personal advice. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It's just general in nature only. Again, lockdowns are certainly ravaging through this part of the country and where we currently sit. The thing is though, it's not necessarily affecting the Aussie dollar, and that's what I really want to explore at the moment, is that the Delta strain, which is clearly ravaging across the entire world, it's not actually becoming as much of a problem as one would think, but at the same time, we are wary of it. And it's, again, the US dollar, and why I highlight that is that I've been really strong on the US dollar. I think it's been the trade to be in. You just had to pick your pair. In fact, the easiest way to probably have done it is actually to go down the Dixie route. But that is just over the last 14 days started to ease up. It's not just from a fundamental point of view, which is, you know, what I love talking about, technically as well. MACDs, RSIs were telling you it was getting a little bit of fatigue, that incredible strong run. Not saying it's the end of the whole movement that's going on in the US dollar, just that easing was there. And again, treasuries are also supporting that. But what I want to highlight is that the data too in the US is just getting a little bit wary that Delta is filtering through. Thankfully, and the real positive thing is that the number of deaths aren't increasing and hospitalizations, although they're a little bit higher, aren't as bad. And that's because of vaccines. And that's the other part of this, is that vaccines are becoming a well and truly proven method of helping with the pandemic, and they're slowing this down. But it is just starting to take what has been an incredible run in data just a little bit out. So have a look last week at the ADP payrolls. They were at 330,000 jobs created in July. That's still incredibly impressive, but it's almost half what they'd been averaging over the last couple of months. Just shows that there's a little bit of slowing down happening there. The counter to that is the ISM numbers, which were the best they've ever been on record at 64.1, up from 60.1 the month before. And there was mainly led by exports and also purchasing price. Employment was also up there in that subsector. So maybe you can take the ADPs as they were. Then you've got Fed speak also suggesting that that issue around Delta is just holding true. And even someone like Richard Carita, who is a massive hawk these days, very positive on the outlook, very positive on the inflation, although he does reiterate that he's got the board's view, which is that it's transitory, although in his personal view, it's going to actually be better than expected. He also says that employment's the same thing. But the words that caught the market off and probably put that volatility we're just starting to see into pairs was that he was surprised by the reaction in the bond market, and he believes the bond market pricing is down to what's going on in Delta. So I know that this video is a little bit jumpy with that, and I know we're a little bit cautious. I'm certainly still strong on the idea the US dollar is going to be the place to be over the medium term, but have a look at dollar US. You can see what's going on inside euro dollar, apologies. It's gone to a 3-week high with regards to where it hit 119. Remember, just over 3.5 weeks ago, we were sitting at 117, and there was a prospect of going to 116. That sort of moved away. You can also have a look at something like dollar yen. Dollar yen hit a 3-month low in terms of where it currently sits, and you can see the US dollar is falling quite strongly there, down to 108. It's jumped a little bit back into 109, but again, all that pressure is there, and it's again the view probably that a profit's been taken, the unabated appreciation of the US dollar needed to end, and as I said, technically it's there. But there is just another sign that maybe we're also now getting a little bit of wariness from the Delta strain, and that maybe the fundamentals which was driving this data that would then lead to the Fed moving earlier is just waning as we hit the end of 2021.